your insurance company won't pay the related cost. So similar to other insurance policies, intentional loss is not covered. The second exclusion, property owned or transported. Liability coverage is not provided to any person for damage to property owned or being transported by that person. For example, if you are driving home from the grocery store and you are hit by a driver, driver B, if you are injured or your car is damaged, the driver B's insurance policy will cover. However, the driver B's insurance policy doesn't cover your broken eggs and cracked cell phones. In other words, an auto insurance policy doesn't cover your personal items. Another exclusion is using the vehicle as a public or livery conveyance. Let's see an example. Karen is the named insured under a PAP that provides coverage for bodily injury, property damage liability, medical payments, and uninsured motorist coverage. Okay, so her auto insurance policy includes almost everything. She was involved in an accident while she was transporting a passenger for a fee. The ride was arranged through a transportation network platform, such as Uber. Are the passengers' medical expenses covered under Karen's PAP? The answer is no. Karen's insurance company will never pay the passengers' medical expenses. Why an insurance company can reject the payment if the insured use the vehicle as a public or livery conveyance? The reason is quite simple. If you use your car as a public conveyance, you drive more frequently. In other words, you are more likely to have car accidents. Rates for private passenger automobile insurance do not anticipate the hazards inherent in operating an automobile for hire to the general public. If you use your vehicle as a public or livery conveyance, or you are a taxi driver, you need to buy a business auto policy, BAP, not personal automobile policy, PAP. You need to pay higher insurance premiums, higher premium rates. The reason is that, well, you are more likely to file the claims. You drive more frequently. If you are a part-time Uber driver and you have a personal auto policy, you are still covered in some situations. In normal times, if your rideshare apps is off, you are covered under your personal automobile policy. However, if you turn on your rideshare app and are available to drive for Uber, you are not covered under your own personal auto policy. Instead, you are covered by the transportation network company, by Uber. Once you finish the ride, you turn off the rideshare app, you are covered under your personal auto policy again. Another exclusion, vehicles used in the auto business. If a person is employed in the auto business and is at fault, this person is not covered. First, what does auto business mean? Auto business refers to the selling, repairing, servicing, storing, or parking of vehicles designed for use mainly on public highways. Suppose today you take your car to a garage for repairs. If a mechanic has an accident and injures someone while road testing your car, this mechanic is not covered under your PAP liability coverage. So if this mechanic is sued, your insurance company doesn't need to pay anything. Instead, the mechanic's employer needs to take responsibility. To be clear, in this case, if you are sued, okay, because you are the car owner, you are still covered under your own personal auto policy. Another exclusion, using a vehicle without a reasonable belief of permission. It's quite fair, right? If a person uses a vehicle without a reasonable belief that he or she is entitled to do so, the insurance company doesn't need to pay the related costs. Next exclusion, a nuclear energy exclusion. Okay, so again, this is similar to other insurance policies. Okay, nuclear energy is related to catastrophic risk. Another exclusion, using vehicles with fewer than 4 wheels. Vehicles with fewer than 4 wheels, such as motorcycles or motor scooters. Your policy is a personal auto policy, so your policy only covers vehicles with 4 wheels. For people who have a motorcycle or motor scooters, these people can buy a motorcycle insurance policy. Next exclusion does not apply to vehicles inside a racing facility and used for racing purposes. We know that racing drivers are exposed to high-risk situations, such as car crash. So the general personal auto policy doesn't cover a racing vehicle. Next exclusion, vehicles furnished or made available for the non-insured or family members' regular use. Liability coverage excludes a vehicle other than a covered auto that is owned by, furnished to, or made available for the non-insured's regular use. What does it mean? If you drive your friend's car occasionally, you still have coverage under your policy. However, if this non-owned auto is furnished or made available for your regular use, your PAP liability coverage does not apply. Theoretically, you don't own this auto. However, in reality, this auto is made available for your regular use. Your PAP liability coverage does not apply because there is another covered auto in your PAP. If you want to extend the coverage, you want to include this non-owned auto, you can contact your insurance company and pay extra money, extra premiums for the endorsement. If you don't add the endorsement, your insurance company doesn't need to pay the related costs. As we mentioned earlier, Part A, the liability coverage is mandatory. Every driver needs to have an auto insurance policy with Part A. Different state governments adopt different regulations. We can see here in Texas, the minimum liability limits 30, 60, 25. Okay, so it means when you buy your auto insurance policy, your liability coverage, at least for the bodily injuries per person, should be $30,000, at least $30,000. And for all persons resulting from any one accident, the maximum amount, $60,000. And the property damage, $25,000. From this table, we know that different states have different regulations. Some states use higher minimum liability limits, such as Alaska, 50, 125. And also, some states use lower minimum liability limits, maybe 25, 40, 10. Now, let me ask you a question. Suppose you purchase your auto insurance policy in Texas. This fall, for some unknown reason, you decide to drive your car from Texas to Alaska. And unfortunately, you hit a person in Alaska. What will happen? An interesting thing will happen. Your auto policy automatically adjusts to comply with the financial responsibility. Okay, in other words, now your liability coverage is the minimum liability coverage required by the Alaska state government. Let's move to the next section, other insurance. If multiple auto policies cover the same loss, each company pays its pro rata share of the loss based on the face amount. However, if we can identify which insurance company is the primary insurance company, the primary insurance company pays first, and then the excess companies pay the rest. For example, Phillips is the named insured and borrows Nicole's car with her permission. Phillips has $50,000 of liability insurance, and Nicole has a $100,000 limit. Both policies will cover any loss. Phillips negligently injures another motorist and must pay damage of $125,000. In this case, it's Nicole's car. So Nicole's insurance policy is the primary insurance policy. Nicole's insurance company pays first. However, in this case, the actual cost, $125,000, is above the Nicole's policy's limit, $100,000. So the Nicole's insurance company only pays $100,000. And Phillips' insurance policy pays the difference, pays $125,000 minus $100,000. So Phillips' insurance policy pays $25,000.